Good evening, all. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for the evening. As we're here now on Wednesday, the 2nd of October, 2024, let me start off by wishing all of our Jewish viewers a very happy New Year, Lashana Tova to all of you. As for market data for tomorrow, here's what you've got coming on. The Challenger Group at 6:30 a.m. will come about. We'll have the weekly jobless claims release at 7:30 in the morning. They're looking for about a 2,000 more than last week. S&P Global Group released their final September service sector PMI numbers at 8:45. The ISM will release their U.S. service sector indices for September at 9. Factory order data for August at 9. And we'll get the natural gas storage data at 9:30 in the morning. All right. So that's a heck of a lot. Now, you know what we're dealing with. We're dealing with a couple of elements here. Number one, how's the economy doing? And that's always what we look at. And we're doing this right now. Okay, we're marking time. Interest rates in the U.S., a slight climb that we've been seeing ever since the rate cuts were made. There's a battle going on now, a bigger one now, that the Fed does not have to go in November for 50 basis points. The question is 25, and if the data comes in as it's been doing, maybe none. Maybe they wait for December. But what you've seen is ADP numbers way bigger. They're 50% bigger than they were a month ago. I mean, that's hard to believe, but they just keep growing. I think it's 2 reports ago. They just keep growing. Number 2, the JOLTS report shows more jobs out there. Now, I agree, the higher rate has been slower, so you don't have to write me about that. I see it, okay? And the quits rate is down. However, people that want jobs can get jobs, and that's the important thing. Are they going to be able to get a longshoreman job for almost $200,000 a year? Well, they'll try. Why not? And to me, as an American, I'm very much against what this union is trying to do. Really against it. They're trying to say that we should throw out technology. It doesn't exist for the betterment of the longshoremen. Why aren't the longshoremen saying, retrain me to use the technology in a better way? We can get more done, our productivity would go up, costs for everybody would drop. You can afford to pay us then because of that. But instead, we want to go back to the dark ages and say, technology doesn't exist. Now, that isn't going to fly. So the question is, where's the middle ground? And I don't know. What I know is that the current union leader is taking the book from the automakers. He had to be watching it because he's acting just like him, a clone. And we're not coming back. And if we come back, we'll work so slow you don't know what it is that the president invokes the Taft-Hartley. And we're keeping our jobs. You're not getting rid of us. And no, $150,000 a year isn't enough. I want $200,000 a year. Okay. Well, I want to win the lottery tonight. Okay, I hope that I do, or tomorrow night, but you got to be a little bit realistic. So we will see. What's our president doing about it? Nothing. Because if he invokes the Taft-Hartley, he costs votes, may cost Miss Harris the election. So his hands are not tied. He's going to sit there. He's out anyway, so what does he care? The second thing that the president did today is starting to tell Israel, you're not to attack Iran's nuclear sites. Since when did we become the country that wants Iran to have a nuclear facility that works and can build bombs? If Israel has the capability to take them out, they've been hit by missiles twice. Why are we saying don't do it? I guess Joe wants Iran to have the nuclear weapon. I can't think of a better time for Israel to do it. Who's going to come to Iran's defense right now? I don't think Russia is. I don't think China is. I don't think any of their Mideast neighbors are going to. They're bogged down with Israel as it is. And then Israel's got the defense of its allies, including us, if they do something more severe. Is Israel willing to take the hit, that they're going to take a big hit if they go after that? You know it. I know it. I don't know. That's, they've shown that they don't care. Okay. I don't know which way it's going, but if you think that's not playing itself back and forth in all these markets, shame on you. because it's right in front of you. The strike back isn't going to happen in a month from now. The opportunity staring them in the face. It is the Jewish holidays. I never thought they would do it on the night of Rosh Hashanah or the day after. But there's a lull that steps in between now and Yom Kippur, if you pay attention to the Jewish holidays, which most don't. And that lull is where it comes up. So be careful. This thing's right around the corner, and I don't know what they'll do. Maybe they'll listen to Biden and go, yeah, we'll stay with the tit for tat, and we'll just do something like we did last time. Are they going to wait for Iran? Because it's testing different missiles. What's getting through? A couple landed, as you know. Are they waiting for it to hit cities and take out hundreds or thousands of citizens? I don't know, but I doubt Israel's going to wait. We have how many days in a row up and win? I mean, this is amazing, and this is all that Chinese action, those stimulus packages. But 1, 2, 3, 4, 5. Then you had a down day. So I was counting it wrong the other day. I thought, in all fairness, that we were getting up to 7. We didn't. That down day meant you're just running on this market, and you can see where it's at. It's very important, the count of consecutive moves. What's happening here is the 18-day average is about to give you a bullish crossover of the 100. This market's lifting. It's over the Bollinger Band. It'll soon ride to the right-hand side and start a slippage off of the market getting ahead of itself. Okay, I'm not a top picker. Wherever it happens, but I don't see anything bearish on this chart. I see deep breaks as buying opportunities that's what my point of view is. When I look at where the stochastics are, they're embedded, and they've been telling you every day you start off making a higher high, it's not a buy. If you've taken my enhanced Bollinger Band course, you would see that. When we look at Rivian, you can see how the market keeps falling down with an embedded reading. Again, the enhanced Bollinger Band course, doing just what we talked about, and you had your bearish crossover. Okay, so eventually this market will form a nice bottom. Patience, patience, patience. In CrowdStrike, as it went up here, I told you right at this point, the videos are there, that I thought we'd have big resistance and we might have to slip back to the 18-day average to fight a battle. Now, the determination of what happens next. Do you take out yesterday's? That is Tuesday's low, close lower, and try to get back down here? I don't think that's going to happen. I don't think you're going back to this low necessarily. Therefore, I think you're in the zone where the market's going to try to set up some buy signals. It's not there yet, but that's what I expect. Uranium reached for a higher high today. It still has the embedded reading. Until the market loses the red line, it can go higher. When it loses it, that's when we'll talk about where the market might have a real problem for itself. Dell Computer, look at how much it has pulled back. If you really look at Microsoft, Dell, there's a number of markets that have pulled back very hard doing this exact scenario. They went up on the hope of the interest rate cuts, and they got it, and the market hasn't been the same, honestly, since then. And they haven't come alive as NVIDIA's just stuck in the 118, 120 mark for the time being. Blackwell's supposed to come out. I was watching an interview with Jensen today, the head of it, and we'll see what happens. But you got a higher high, lower low in Toll Brothers. I like the builders. Let them come down a little bit here. I think you'll be just fine. If the housing numbers are going to be better, if things are going to start picking up, right now you're in a correction mode. The market will give you the opportunity. In the financials, look at how you pulled back, and you're just fighting a battle in the middle of nowhere. If you were to ask me, Ira, is there anything to do in that chart? No. I'd just be staying away right now. In XLI, you have the embedded reading. Until this is lost with the red line under 79, this market continues to be a buy on pullbacks, looking for the upper Bollinger Band. When it closes under 79, out. In XLE, well, you know what this is about. Is Israel going to hit any of the oil facilities? Again, I want to repeat, you don't think that Saudi Arabia and other OPEC members aren't ready to increase production if Iran loses the ability to sell the oil that the Biden administration has been letting them sell? You can't get away from that. That's just what's going on. So what we don't want to see is you take out Iranian oil, get this one, and then oil spikes and nobody else is producing. That won't work. But today at the ministers' meeting, the Saudis pretty well left a hand wide open there. Number one, I'll bet behind closed doors, if it happened, well, they would just have to take advantage and keep the world supplied in oil, to be fair. So then everybody can start producing again, because they all need money. I mean, the $70 range isn't what their budgets were calling for. It's a high price, but it's not what their budgets. The Saudis threatened $50 oil if 3 of 4 of the members that have overproduced through the whole summer don't come back. In other words, price war. But you don't need one if you take out Iranian oil. Then everybody can produce, everybody's happy except the Iranians. I don't know what Israel's going to do, but that's the world event as I see it. When we look at SLV, well, let's come over here. I went to gold too fast. In the gold market, you haven't broken the embedded reading, and until you do, this market still stays with a bullish format. It's that simple. Now, the weekly chart is sitting right on the Bollinger Band, so you got to be careful when you're right on it. I want silver, because it's lost the bullish embedded reading, to drop back. And as you know, I've got a silver report out there. It goes off tonight. That is today, Tuesday, at midnight Central Time. That's what I found out the time is. So at 12:01, it's gone from our website. So if you want to view it, now is your time to do that. Higher high, lower low. In the copper market, still bullish. This market is betting on China, 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 China. What do you think Winn's doing? Why do you think the run-up in that? Do you think that they suddenly have the revenue? Do you think people are suddenly buying the copper? Neither of that's happening. This is all on the come right now. BND, well, the support should be the 74.93. It's certainly on the daily chart now to buy, but it is on the weekly. So you got to see how the weekly turns out. The weekend charts will be fun to look at. In the dollar, I thought we could get up to the upper Bollinger Band, and I thought you'd have resistance on the first challenge of the 200-day average in the Bollinger Band. You're over it slightly. That's still the resistance zone. And I thought that I was hoping FXE could get low enough down to the 101.56 area to call it a day. And I do think that October 31st, Ms. Lagarde is going to pull the number, and she'll do at least a quarter-point rate cut. If things keep falling in Germany, and if France isn't doing well, and inflation keeps dropping, she may get aggressive with a 50. So one is coming, in my opinion. So which one? That's why the market is down at this phase, in my opinion. So again, the silver report, you can move your cursor up here. There'll be an icon. Go to iraepstein.com. Staring on the left side. You have a great evening. Happy New Year, all my friends out there for the Jewish religion. And I will catch you first thing in the morning. Take care.